Our next presenter is Jack Lifton. He's the chairman of the Critical Minerals Institute. Welcome, Jack.
Thank you. Today's discussion I'm going to have with you is I've entitled, "Can the production of the necessary critical metals for a total green energy transition be scaled up to meet the demand anytime soon?" That's a very windy way of saying that I'll bet that all of you listening to me are not paying attention to the limitations of a man's ability to access natural resources economically. We seem to have forgotten this. Let me tell you a quick old man story. 15 years ago, I started looking at this topic, and I calculated how much of metals were being produced worldwide. And what I found was that there were really just two or three classes of metals at the time. One was the base metals, which I call the structural metals, like steel, iron, aluminum, copper, magnesium, things like that we used to build things. Then there were the more exotic metals, so to speak, things like manganese, chrome, molybdenum, tungsten, things that we basically use to alloy with iron to make specialty steels. But a third group had come in, and the third group was what I decided didn't have a name. So I baptized them myself as the technology metals. And by that I meant the metals whose electronic properties enable us to make miniaturized devices for the transmission of energy, radio, computers, cell phones, television, things that require more than base metals or the metals used to make alloys of base metals. And in that time, 2007, I decided a cutoff was 20,000 tons a year. Now, that may sound like a lot to you, but that's the typical production worldwide of silver. And so I decided that would be my cutoff grade for rare metals. Below that was a rare metal. Well, guess which one came up next? That's right, lithium. In 2007, 16,000 tons of lithium as metal were produced. Just to give you a comparison, this year there'll be 100,000 tons of lithium as metal produced. That's 6 times as much. We'll come back to that. Okay, what was the use of the technology metals in 2007? Well, cell phones, television screens, computers, things like that. And there was no particular shortage of any of them. And yet people were buying cell phones in those days by the millions of units a week, millions a week. Everybody that you know in the Western Northern Hemisphere world had a television set, at least one cell phone. All Americans had a personal computer. Guess what? There was no shortage of any of the metals' electronic properties of which enable those devices to be made. So, what's happening? Well, around that same time, the guy who made a whole bunch of money in, I think it was PayPal, a guy named Elon Musk, he was in his about 30, 35 at the time, he decided that the rechargeable batteries, which we were using in all of our portable devices, our cell phones, our computers, things like that, could be scaled up. Keep that word in mind, scale. And those batteries could be made large enough to power a car. Well, there were people then making batteries of that size. That's true. And he managed to get a hold of some, and lo and behold, he made a car. And that car, I believe in those days, had a range of about 100 miles. And he knew that wasn't good enough, but people were willing to buy them and try them. An electric car, that was a novelty. General Motors had tried it twice that I remember. once in the late 70s and then again in the late 90s. They made an electric car with lead acid batteries, rechargeable batteries of the type that you older fellows can remember were under the hood of all of your internal combustion cars. They still are. And a very large number of those batteries in a General Motors car called an EV1, Electric Vehicle 1, in 1998 gave it a 100-mile range. But the 100 miles wasn't enough, and it wasn't a lot. And, they made a couple of thousand of them for political reasons, and they leased them all in California. And then California had passed a rule in the 90s that by the end of the century, 2% of all cars sold in California had to have zero emissions. Well, the only car anybody could think of with zero emissions was an electric car. So General Motors made a couple of thousand of these cars for the California market, assuming that those cars would be all it needed to make to meet this California standard. Well, California repealed the standard in 97 or 98 after some heavy-duty lobbying by General Motors, surprise. And so when those cars leases came up, General Motors said, okay, everybody's got to turn them back. Well, a lot of people wanted to buy them. And General Motors said no. They recovered all of them and they scrapped them. They crushed them and put them back in the furnace and made new internal combustion engine cars. At the same time, though, Toyota had gone on a different route. Toyota had taken a technology which was developed by the American company International Harvester, and they created a mass-produced hybrid car. They call it the Prius. And they didn't use lead-acid batteries for the battery portion of this car, which had both internal combustion and electric motors. They decided to use something called the nickel metal hydride battery, which had been developed in Detroit by a company that I worked for at the beginning. And those batteries were about 60% more efficient than the lead acid batteries, but they cost a lot more money. So Toyota, however, started producing this Prius in 1997, introduced into California in 1999, even though it wasn't necessary at the time. And lo and behold, in the last 25 years, they've sold several million of them. But beginning in the late first decade of the 21st century, they switched out this nickel metal hydride battery to lithium ion batteries, which had become available. Okay, in the meantime, in the real world, where most of us live who didn't drive an electric car, thought Priuses were cute, but didn't want anything like that. We were using altogether of lithium-ion batteries, chips made with germanium and gallium, rare earth permanent magnets with neodymium, praseodymium, dysprosium, and terbium. We were allocation among Western people, I would guess, of all those elements put together, average probably kilogram per person, maybe less, but I'm being generous. Okay, so there was no shortage of any of them. But what was lurking in the background was not an increase in cell phones or personal computers, because we had plenty of rare earth elements and lithium and gallium for that. It was this electric car, actually battery-powered electric car. Nobody's paying attention, of course, especially not the miners. Lithium was not a very expensive material. It was in surplus. The rare earths were controlled by China, and no matter how much nonsense was put into the marketplace by Molycorp, for example, in those days about how the American military depended on rare earth permanent magnets for the efficiency of its smart weapons, the U.S. Department of Defense took a different viewpoint, because they felt that a soldier's mission was to break things and kill people, and he could do that with a stick or a stone. Didn't have to worry about a specialized bomb. Now, what's happened in the last few years is that politically, the idea of doing away with fossil fuels has caught fire in the non-Chinese world. And so the politicians and their very, very resource illiterate advisors have decided we're going to switch over from the cheapest, most universally available form of energy ever found by the human race, coal, oil, and gas, and we're going to switch over to production of energy not involving carbon. Well, what are we going to need to do that? Well, we're going to produce lithium-ion battery-powered cars. We're going to produce wind turbines, generators, which use it's called direct drive types. They use rare earth permanent magnet generators, and we're going to convert all of our energy production to use only these energy, what I'm going to call energy intensive elements, which have been defined by someone else as lithium, cobalt, graphite, nickel, and let's say the rare earth elements. These all together are what's absolutely necessary and critical to make the switchover away from fossil fuel. And so a friend of mine, formerly of Queensland University in Australia, and now with the National University in Finland, has been researching the topic of where are we going to get all these materials which 15 years ago were rare, exotic materials. Where are we going to get them, and how much are we going to need? These are the same problem. Let's switch to the second slide here. Okay. My friend in Finland, Professor Simon Michaud, has written a 50-page document. This is page 43 or 4, I think. So I'm urging all of you to look on the website for this conference and find the total paper. But this is the result of his analysis and work. And Professor Michaud started out as a geologist and an expert in explosives. He blew holes in the ground to loosen up the ore to get metal. Now, I don't know if you can all read this, but I just want to highlight a couple of things because I'm talking too long, I'm sure. We need lithium to make lithium-ion batteries. There is no doubt. You can make lithium-ion batteries with a variety of cathodes, but every one of them contains lithium. And a 100 kilowatt-hour battery, the typical size in a Tesla today, contains between 6 and 8 kilograms of lithium as metal. So, in case you're not aware of it, just between the United States and Europe, there are about 700 million vehicles on the road. In the world, there's about 1.4 billion internal combustion engine powered motor vehicles. That does not include freight vehicles. Okay, so what would it take to give each one of these a 100 kilowatt hour battery? Okay, well, Professor Michaud has calculated it, and the column here is called total metal required to produce one generation of technology units to phase out fossil fuels. So for lithium, that would be approximately 950 million tons. Okay, well, this year we're producing, let's say, 95,000 tons. So that would take, at that rate, to produce about 10,000 years. You could probably see there's a problem here. But let's go on and look at, for example, graphite. Every lithium-ion battery, no matter what the cathode chemistry today, is using a graphite anode. These have turned out to be the best. So to to put graphite anodes in all those cars would take 8.9 billion tons. Now the world produces a million tons a year of graphite. So that would only take 3,287 years to produce enough graphite. I urge you to look at this table when you have time, but I think I've made my point. I'm not saying that we're not going to do a lot of reduction of our use of fossil fuels in the next few years. What I'm telling you is that to make any impact just on cars could take, it won't take 10,000 years because there isn't enough lithium. In fact, the accessible economic deposits of lithium, the ones that we can get at and produce from, will probably only allow a tiny fraction of this to happen. Okay, once we've made a few million of these cars, and I think this year they'll sell a few million, 10 or 11 years from now, when they get scrapped, we'll be able to recycle and continue to make the same number as we scrap. That's recycling of automotive metals is very efficient. Okay. There's going to be now no way to increase the production of these critical metals for energy by anything near the amount needed for a total transformation. I'm not saying that you should forget about this, because the world's major car makers have now gone whole hog into this. Everyone has totally invested in electrification. However, I'm 82, so I may not see the end of this bet. I'm going to bet that by the end of this decade, we will have less car makers, because some of them are going to go bankrupt because they will have powered up to make millions and tens of millions. The typical production today is 100 million cars a year worldwide, of which US and Europe account for 40% and China 25%. At the end of this decade, I would be very surprised if there were enough lithium to make batteries for more than 15 or 20 million of that 100 million. Some of these companies will then be, if that happens and people do buy these cars, a lot of these companies will be out of business. We're going into a free-for-all now. The best investment you guys can make, and I'm not an investment advisor, I'm just telling you my perspective, would be lithium, graphite, nickel, cobalt, rare earths. All of these metals are critical for electrification of cars and the production of wind turbines. And all of these metals are going to be in serious deficit by the middle of this decade. And it's going to be a free-for-all. I leave you with one thought. Please don't think the prices of these metals can go up infinitely to cover the increasing cost of producing from lower and lower grade mines as we exhaust them, because the automotive industry cannot afford open-ended pricing. There's a limit, and those limits are already being discussed in the halls of Detroit and Stuttgart and Wolfsburg. And we've reached the limit with lithium. The price just can't go up anymore. The so-called balancing of the price of batteries with the cost of gasoline is now long shrouded in the past. Batteries are already the most expensive part of making a car, and they're going up dramatically. At some point, people will not be able to afford to buy these cars, and the car companies will not be able to afford to buy the raw materials. That's got to stop. But when we reach that limit in price, for example, on lithium, that's going to shake out who can produce and make a profit at that price. Right now, everybody can do it because the price is so high. But keep in mind that there isn't enough metal to go around. There is not going to be enough metal to go around. We, the human race, have high graded all of our mines for 150 years. In other words, taking out the highest grade, the easiest stuff to get at. It's getting more and more expensive to mine, and the demand is not what it was in 2007. It's 10 and 20 times what it was then. So good luck to all of you. Somebody let me know how this works out. Thanks a lot for listening.
Hi, and welcome back from lunch. I'm pleased to say that our next presenter is Mel Sanderson, President, North America of American Rare Earth, which trades on the OTCQB venture market under the symbol ARRNF, as well as the ASX under the symbol ARR. American Rare Earth is developing rare earth projects in Wyoming and Arizona. Mel, welcome.
Thank you very much. It's a pleasure to be here today. And in the room, I see some familiar faces. Thank you for being here. And online, welcome to everyone. Thank you for being here for this presentation about American Rare Earths. I am very proud to be the president of this company. I think that it is very possibly the most crucial key resource for the US as we look to transform our economy and meet our national security needs. As with all such presentations, this one does include some forward-looking statements. Please keep that in mind as I walk through our story. So as I just mentioned, I really believe that we are in the right place at the right time and with the right materials. I don't know if all of you have had a chance to read any of our materials on our website, but whether you have or have not, what is important to know about us is, as was mentioned, we have two incredible projects. Our flagship project is Halleck Creek in Wyoming, and our second project is La Paz in Arizona. Particularly, the Halleck Creek project is showing outstanding metallurgy and mineralogy, leading to enhanced profitability for the future. Our company is well funded at the moment. We have approximately $13 million in the bank, which is more than sufficient to support the development that I'm going to talk about momentarily. By the way, I forgot to mention, as I'm going through this presentation, if you have questions, please ask them. I like to have a conversational style, and I find that the conversation works better if you have a chance to ask the question when it's fresh in your mind. So as you see here, we have a vision of creating significant shareholder value and doing so by supplying rare earths to support renewable energy, green technology, national security. So as a company, as I mentioned, we have some incredible resources. And those resources are leading us on a pathway that will take us from exploration through development, production, and into finished products, mines to metals. That is our objective. These are the sites that I mentioned. I did not speak to Searchlight in Nevada. We will not be developing the Searchlight project imminently because we are concentrating our efforts on bringing Halleck Creek to market, followed by La Paz. There's an important reason for that. The deposits at Halleck Creek and La Paz have remarkable similarities. Starting with, they are both remarkably low in uranium and thorium. This is obviously a key element from various aspects. It's going to make it a lot more cost efficient for us in bringing this project to fruition. The amounts of radioactive byproduct are so negligible that we do not believe we will need a permit from the Nuclear Regulatory Agency. We will not need to invest in controlled storage facilities. We will not need to worry about burying or otherwise processing dangerous materials. That's a huge plus for us. Continuing along that same line of that unique element of both of these deposits, we were invited to be the feedstock supplier to two different US government-funded research projects, one undertaken by the Department of Defense, the other by the Department of Energy. The focus of both projects is to arrive at a cleaner, greener processing of rare earth materials. I'm no scientist, so I can't give you a good explanation of what they are, but what I can tell you is engineering bacteria and engineering enzymes to be able to bind specifically to elements is at the heart of this research. And if either of these procedures come to fruition, it's game changing, not just for my company and not even just for the mining industry in America, but potentially globally. Because one reason that China obtained such a dominant grip on the rare earth industry is because processing rare earths is difficult, unpleasant, and not environmentally friendly. Therefore, the US government is concentrating on bringing better processing and separation technology to the rare earth industry. And the same could be said for the funding that the US government is giving to Linus Core, which is building 2 processing plants in Texas, one for heavy earth, one for light earth. And also, the US government is assisting MP Materials, the only currently producing rare earth company, to set up its own production facilities and break MP's dependence on China. So you see how key this uranium and thorium issue is. Another remarkable similarity between our 2 sites, Halleck Creek and La Paz, is the nature of the rock. Both of these will be hard rock deposits. What does that mean? It means that we will process this as an open pit mine, very similar to the way that copper, for instance, is mined in Arizona. And our recent JORC report was astonishing even to us. We had high hopes, but Halleck Creek has exceeded those. We discovered that we have 1.4 billion tons of rare earth in Halleck Creek, of which 25%, or approximately 100 million tons, are the key battery materials. Yes, Tom? JORC. So those materials are neodymium, dysprosium, and praseodymium. So 100 million tons of that. Also key is that these materials run true from surface to depth. What does that mean? When you're doing an open pit mine, a lot of times you have to move a lot of empty dirt to get at what you want, because particularly in the copper industry, you find that a lot of the good stuff is buried down deep. In our case, the good stuff starts virtually at the surface and continues with a consistent disbursement to 175 meters, which is as deep as we've gone so far. Our geologists believe that the deposit could run as deep as 500 meters, and we obviously will be doing ongoing drilling exploration work to further prove out the extent of this deposit. Because another very important point is that those numbers that I just cited represent only 25% of our concession area at Halleck Creek in Wyoming. Put that another way, what we have currently discovered at Overton Mountain and Red Mountain is suggestive of a mine with a life of 50 to 100 years using today's existing open pit extractive technology. To put it yet another way, MP Materials will run out of ore at some point. We have the ore of the future. That's why Halleck Creek is so important. Because what we begin today with our EV industries, our wind turbines, that is nothing if it can't be continued. We are the future. Yes.
Mel, before you answer, would you mind repeating the question for our online audience?
Yes, okay. The question actually sounds as if we have two questions here, because the first part of the question related to when I said that we are well funded to undertake the works that we are intending to undertake. So let me address that part first. $13 million in the bank is going to fund the following works program. We're intending to get to our preliminary economic assessment, an important milestone, no later than the first quarter of next year, and we hope to get there by December of this year. We have identified a partner and are working with that partner to do our preparatory work for the permitting process. We are launching our economic studies. And I have to tell you, in an ironic way, the extra snowy winter in Wyoming this year is going to be a plus for us, because it's going to take some time. We're now being told the snow won't melt until July. So it better hurry up, because I live part-time in Wyoming and it can start snowing again in September. But hopefully the snow melts by July, and we're going to have exceptional runoff. Why does that matter? It matters for hydrology, and it matters for our environmental studies. We're going to be able to see water flows this year in our site that might not have been seen in 20 years because of the extensive drought in the West. That, in turn, is going to give us better statistics on things like, do we have ephemeral streams that need special attention under the EPA rules? Do we have migratory birds that need special attention under the EPA rules? Do we have any species, for instance, of frogs or toads, which only emerge when there is sufficient water for them to do so and would need protection? So this is actually going to be quite a benefit to us from an ESG perspective. Also included in the program of works is a professional hydrology study. We need to better understand what the water sources are that could be available to us and how much water there is. Because we are very, very cognizant that we live in the Western United States, an area that has been and continues to be in a historic drought. So it is our responsibility and our objective to limit our water use to the maximum extent possible, and to build to the maximum extent possible a closed water system. So all of that will be funded from the money that we currently have in the bank. Now, the second part of the question was, how do we determine economic viability at this stage of the project? We have some of the factors necessary to do that. We have our metallurgical findings that have clearly shown us that we will be able to engage in a very standard crush grind process, which is, as the copper industry has long demonstrated, a low-cost means of processing large volumes of rock. So we do have that variable that we feel pretty confident about. Other variables, we're hoping that as we work our way through the PEA study, that those are going to clarify. One thing that we have to really think hard about is, how quickly do we hope to build our mine? We hope to build our mine in 5 years. I stress hope. There's all kinds of variables in that, especially involving the permitting process. But let's just say we decide we want to say 5 years. Then we'll be in a position to take a look out, see what the demand curves are showing, see what the pricing models are showing, and then incorporate that as well into our economic viability studies. Another key variable that we are waiting on is a better estimation from those directly involved as to whether either or both of those alternative processing streams might begin to prove out over the next 5 years. Because if they do, then clearly American Rare Earths is in the leading position to become the licensee to build and operate a brand new, never seen before, state-of-the-art processing facility using those technologies. So we have some variables still in play, but we're working towards that, and we hope to be able to come to grips with it around the time that we come out with our PEA. Yes, sir. Nope, got your answer? Okay. Let me touch very briefly on La Paz while I'm talking about similarities between projects. So we did an initial JORC report on La Paz in 2021, which is on our website. And that indicates another massive resource, potentially another billion tons in the ground in Arizona at a lower grade than Halleck Creek, but rich in scandium. Why does scandium matter? Scandium is to the aluminum industry what molybdenum is to steel. You add that to you add molybdenum to conventional steel, and you get steel that's strong enough to build all of these lovely skyscrapers that we find here in New York. And aluminum, you add scandium to aluminum, and it makes it stronger while keeping it light enough to be used to make electric vehicles, which clearly need to be lighter in weight overall while remaining strong enough to meet US safety standard requirements. Military also has extensive use for scandium. So again, as we look down the road at La Paz, that would be our second project that would come to fruition after Halleck Creek. And at that point, we would then be turning to that new market in scandium. This chart is an interesting one because it kind of goes to that whole thought of, where do we sit in the big scheme of things? And this is our first attempt to answer that question using publicly available resources for a basis of comparison. So it confirms what we already knew. There are projects that have better grade than we do. Our grade is middling, 3.3, 3.5. But as my colleague, Chris Gibbs, our CEO, recently said at a presentation in Australia, grade may still be king, but scale will always be queen. And we have got almost everybody licked by leagues and leagues when it comes to what we've got in the ground. And as technology continues to advance and improve, relative value of grade becomes less and less. You can see this in long-lived mines like the Morenci mine of Freeport-McMoRan, which has been operating continuously in Arizona for almost 150 years. And thanks to technological advances, has been profitably harvesting lower and lower grades of copper from that site. So we fully anticipate seeing the exact same phenomenon for our rare earth deposit as well. I spoke earlier to our mineralogy, and this slide addresses that. And as you see, what it is suggestive of is that we have that vast amount of stone, which is going to readily yield to conventional processing with high recapture rates and low wastage. Obviously key for cost reduction on both fronts. Now this part, the metallurgy, this is interesting because you see it's just a conceptual flow sheet. And part of that goes to, we don't yet know about the research and whether that research strand is going to prove out and how it would play into our metallurgical process. And as I mentioned, we have these various collaborations underway, and we have recently been approached by another couple of universities to take part in privately funded research, as well as the US government-funded research initiatives from the Departments of Defense and Energy. I can't believe that this audience is so quiet. You're just stunned by all this good news, right? You're just bumfuzzled.
So this may be a question that it could be a wrong question. So just please correct me if I don't understand the process by which things are done. So you have proven and you don't have proven and probable. You have inferred and indicated,
Correct.
and you're going into a PEA. At what point in your timeline are you going to put out a 43-101 indicating proven and probable?
I will tell you that we hope to do so pretty much coincident with the PEA. It's part of our project of works to do so this year. Handing back that microphone.
Follow-up question on that one. So you're using a novel technology to extract.
Potentially.
I mean, there's alternative solutions, and hopefully your PEA will do alternatives. And so,
Yes, it will.
are you an open pit or are you an underground? And how do you do a PEA without knowing where the ore is? Is kind of the basis of the question.
We're going to be an open pit mine, and we know very well where the ore is. If you look about 4 pages deeper into this presentation, or you visit our website, you will find some very precise mapping methodologies involving Overton Mountain and Red Mountain, which are the open pit development sites that we'll be concentrating on as we move to build this mine. And right down to individual core holes, we know the values contained in each core hole of the magnet metals and their placement within. So we have a very strong mapping scenario that underpins the development program.
Hey, could you talk more about the processing part of it? Is that going to be part of your effort? Or is that going to be part of a JV with a separate company? How does that work? And maybe a comparison to what Ucore is doing with their processing.
Ideally, and I will preface that by stressing ideally, because in our case, we're dealing with the US government. Ideally, it would be a kind of a JV with the US government, because we expect that the government would probably want to hold the patent itself for the relevant technologies, but that we could be the licensee to operate a processing plant using the successfully developed technologies. So that's a really carefully couched, forward-looking statement, but that's the best answer I can give you, because as with all USG-funded research, there's restrictions on what we're allowed to talk about. It's coming out of the universities funded. The question was, does the technology come out of the government or out of the universities? The money is coming out of the government through Lawrence Livermore Labs and the Critical Materials Institute, and flowing to a consortia of American universities that are working on the actual project development.
How much of your success is predicated on the proving of this new processing?
No, it's not essential to us at all. We can develop the mine with existing processing technology. And that was why that whole metallurgical process was so important for us, to be able to prove that we could bring the mine from rock to fruition using existing conventional technology. It's
Then-
obviously a huge potential cost savings if any of the research pays out.
And where would it be processed?
They're at Halleck Creek in Wyoming.
Any other questions from?
You're dealing with the Department of Energy. Do you see a DoD come on, but Department of Defense?
There's 2 different programs, actually. One is funded by the Department of Defense. In fact, it's in the screen that's up right now. No, it's fine. It shows that that shows that one is Department of Defense and one is Department of Energy. So they're working on related concepts, but with different materials. So one is working with bacteria and one is working with enzymes, but for the same objective. You're welcome.
Does this include DARPA?
Yes. Okay, well, it looks like we are out of time. Thank you all very much for coming to this presentation today. I hope you found it interesting. I found it a pleasure to talk to you about my company. And look us up. Keep an eye on us. As I said at the beginning, we are the future. Thank you.
Thank you, Mel. Thank you very much.
Hello, our next presenter is Jonathan Lee. He's the chairman of Largo Physical Vanadium Corp., which, as of this morning, started trading on OTCQX Best Market under the symbol VANAF, as well as on the TSXV under the symbol VAND. Largo Physical Vanadium is a vanadium holdings company that purchased and owns a portfolio of vanadium products. Welcome, Jonathan.
All right. Thank you, John. I appreciate it.
Thank you.
Thanks for the introduction. Well, thanks everyone for being here at the presentation. I'm the chairman of Largo Physical Vanadium. We just, as John said, we just started trading on the OTCQX this morning under VANAF, and it's good to see some familiar faces here, actually. So here are the disclaimers. So what is Largo Physical Vanadium? We buy and hold physical vanadium to give investors exposure to the vanadium price, very similar to other financial commodity structures and vehicles like GLD, which buys and holds vanadium, buys and holds gold, SLV, which buys and holds silver, SPUT, which is the Sprott Uranium Trust, which buys and holds physical uranium. Largo Physical Vanadium is similar, and we buy and hold physical vanadium to give investors exposure to vanadium price. The one caveat is that what we are planning to do in the future, in the very, very near future, is instead of holding the vanadium, paying storage fees into warehouses where most of the other companies or financial vehicles, they store it in warehouses and you have to pay storage fees. We'll be using this vanadium in vanadium flow batteries, so we can actually generate storage revenues rather than pay storage fees. So that will be the one little difference. And we can do that, and I'll explain it to you. But the big difference is that vanadium in flow batteries is fully recyclable and easily recyclable. It does not degrade in the batteries, and it easily can be put back into a commercial product. So we're advised. So the company is actually advised by Sprott Capital Partners. They're they're the advisor and marketing advisor to the firm, and Largo, which is the world's largest primary vanadium producer in the world. So Largo helps buy the vanadium products in the open market, in the spot market, and Sprott Capital Partners is helping on the advisory side, as well as a company called Turmoil. And so what is vanadium? Vanadium is used, 88% is used in steel. So anytime you think about a higher quality steel, so you think about rebar that is used in first world nations, it uses higher amounts of vanadium because it gives you a better tensile strength. And so as the world goes from a kind of a developing country into a developed country, the amount of vanadium used in steel increases, and it reduces the amount of iron in that product with the same structural properties. And so the second biggest use is in vanadium flow batteries, which is basically 2 large tanks of solution with vanadium in it, and it gets pumped across a membrane or stack with a bunch of membranes in it. And that is where the electricity is stored and discharged, and the vanadium is in a solution on the anode, and vanadium is stored in a solution on the cathode, same exact solution. So it's fully recyclable, lasts 30 years, doesn't degrade, it doesn't blow up like lithium-ion batteries does. So there's a fire hazard. There's no fire hazard in that regard. And the other uses are mainly the titanium alloys. So think about and this market is very, very extremely robust today, but think about any new airplanes, whether it be commercial or defense, they need titanium alloys. The titanium alloys contain vanadium in it. And that's the third biggest use of vanadium. So those are the 3 major uses of vanadium in the market today. And then the fourth item is, just like I said, instead of paying storage fees over time, we're going to generate storage revenues by taking this vanadium and renting it out to the battery customer. And I'll explain why that's beneficial for the growth of demand. So this is our cap structure today. It actually went up to $1.98, but it's where we have 16.82 million shares outstanding, market cap $30 million. We have about 1.4 million in cash and 35 million of vanadium owned. So we're trading at a discount to the net asset value today, and we're hoping to close that gap over the last little while, over the near term, and that's one of the reasons why we're starting to. That's why we got listed onto the OTCQX to generate more access to more investors, and so hopefully close that gap between the net asset value of our portfolio and the share price. And so that's the cap structure, but there's also no options, no warrants, so it's a clean structure, no debt. And so in a net cash position. And so here's the vanadium demand, and you can see over the last 20 years, there's been multiple spikes of vanadium price. And if you think about it, the vanadium is 70% of vanadium is done as a byproduct of steel. And so the supply curve is very inelastic, but the demand keeps on growing every year. But because the supply is inelastic, you don't get a supply response right away. And if you look at 2003, 2004 to 2005, there was an increase in rebar standards in China. That's when the price went up 4x. In 08 and 09, the supply from South Africa, which is represent about 7% of world supply. A couple of those mines shut down for a short period of time, and you saw that increased the price by 2 to 3x. And then in 2018, the price went up by 4x again because China increased their rebar standards. So that means they wanted to put more vanadium per unit of steel because this helps the tensile strength of the product and it makes buildings more sturdy. And what we're doing here is we're buying vanadium. We own currently 2.9 million pounds of vanadium. We're buying that in the open market, and we're going to store this in the vanadium batteries. And if you think about the vanadium flow battery, about 30 to 50% of the capex is associated. 30 to 50% of the capex is the vanadium itself. And so what we're doing in this new model is the battery customer, to be competitive with lithium ion, especially in the longer duration batteries or batteries that can store 6 to 12 hours, we are removing the largest cost of that battery, 30 to 50%, and putting it with the owner of Vand. So potential investors like yourself, they buy the vanadium, they rent it out to the battery customer, And instead of the battery customer having to pay that up front, it rents it on a very small fee basis, and they never have to buy the vanadium. And what does that do? That reduces the price of the vanadium batteries, thereby driving demand for vanadium in a very, as I said, in a very inelastic market. And so it's a very symbiotic relationship in that sense. So I think of it as, you always see the pecker on the hippo in Africa, and the pecker eats the mites off the hippo, and it gets fed, and so it's beneficial for the pecker, and for the hippo, he doesn't have any mites on it. So it's a very symbiotic relationship, and that's what we're doing here. We're creating a Go ahead. Sure, go ahead. Yeah, so I'll do it on a per kilowatt hour.
Jonathan, would you mind repeating the question?
Oh, sorry. Yes, I apologize, John. So the question was, what is the cost comparison between lithium ion and vanadium? And so if you look at 2022, City Research did a piece on energy storage. They came up with a cost of $500 a kilowatt hour, with half of it coming from vanadium. So half of the cost was vanadium. So if you think about 250 in this model, this new structure that we're talking about, $250 a kilowatt hour. Lithium ion, I don't know if you guys have noticed, but lithium has gone up about 10x, and now it's come back down. But it's been very volatile over the last 2 years, and so you've seen that pricing change. But that could be anywhere from $300 to $450 a kilowatt hour, is my understanding. So that kind of gives you an idea of what we're trying to do here, is to reduce that capital cost for the battery customer to make it competitive, especially in long duration with lithium ion batteries.
Can I ask a question? As far as your model is concerned about vanadium storage, are we talking about North American vanadium? And I presume we're talking about a battery grade. So tell us your cutoff levels and your geographic locations, because that could spur vanadium production in North America.
Yeah, so we're buying. So, John, do I need to repeat the question, or we're good? Okay. Yeah, so we have 2.9 million pounds. It's in various different grades. We could always rebalance the portfolio. It's right now it's in vanadium pentoxide or in ferrovanadium, but it's stored in Canada, US, and in Europe at this point. But we buy on the spot market. So at Largo, as a technical advisor, will find the best price for us within the context of the market. So we have, for example, a base shelf prospectus that we're applying for. It's going to be a $100 million prospectus, and we can raise capital. And the use of proceeds of that capital would be to buy vanadium in the spot market. So the question was, technically, we don't know where the vanadium is coming from. I mean, there is a bill of lading, and usually there's an origination of who produced it, if that's what you're asking. But it won't.
What I'm saying is, it would be a very nice situation if it was, I guess, feasibly possible just to do North American vanadium, or not, how do you want to say, unfriendly vanadium. And that would be something that maybe the stockholders could rally around, because they would know that you're, I don't know, did you get vanadium low grade from wherever, China or Brazil or whatever, and maybe you could get it elsewhere and still be something that's good for everybody.
Yeah, so in terms of the supply of vanadium produced in the US, it's very limited. So there's a company called AMG that produces a small amount out of Ohio, probably 1 or 2% of the world's production. And there's a company in Arkansas called US Vanadium. It's privately owned. And my understanding, it's a very small amount of vanadium they produce. So from North America, it's probably a small amount of production profile. But that being said, we have purchased from South Africa, Europe, the US, but there's typically a bill of lading and where it was actually produced. Yep.
18, would you ever consider selling or hedging, or would you just hold straight through?
Yeah, so the idea here is very much like the other physical products, is, our view is that if the net asset value of the shares go up because of the vanadium price going up, our net asset value will go up. And so, we're expecting that the share price will, follow. And so the reason for going public in some respects is to give that investors liquidity in that respect. So we don't expect to sell that material. So this was the chart. I'll go to the next slide. And so I'll give you, this is a little bit of background on where vanadium flow batteries, the TRL, the technological readiness level of it. Up until Q3 of 2022, there was about 343 megawatt hours of energy installed to date. And it's been over 185 installations globally. And we're just getting started. So up until the inception of this technology, it's technologically proven because there's 185 or 184 of these installed. China completed a 400 megawatt hour battery in Q3 of last year. And they've also announced, and I'll put on the next slide, but they've announced another 2.6 gigawatt hours. So in the span of basically 3 quarters, we've had announcements to 4x or 5x the amount of vanadium flow battery installations to be installed over the next year or two. And I like this quote from Argonne National Laboratory. There was a woman named Sue Babinick who leads the stationary storage program at Argonne, and she was saying this at the International Flow Battery Conference in 2021. And this goes back to the technological readiness of this battery. Fundamental cost advantages in flow cells with an asterisk. Given the cost of electrolytes, vanadium works today. If vanadium was super low cost and it had a stable price, we could all go home. Okay, the fact is it's not stable, so that's why people are looking at other chemistries. So you'll see a lot of other chemistries that are coming out in flow batteries, whether it's iron flow, zinc bromide, etc. But vanadium works today. The reason why they've gone to different technologies is because the vanadium cost was 1, high and 2, volatile. And what we're doing here in this new vehicle is removing the vanadium cost and that volatility from the cost of the battery, because now the battery customer no longer has to buy it. They're just renting it. And secondly, that volatility and that price increase, if that were to happen because of additional demand, that all gets borne by the investor or gets rewarded to the investor of the physical vanadium product. And so that's really just a testament to the TRL of the vanadium flow batteries, because it's been around for 20 years or 30 years at this point. And so from a technological standpoint, it works. It's been the cost of the vanadium, and that's what we're solving in this new vehicle. And so, like I talked about before, this is just our head of sales went to our CEO, actually went to Vanatech, which is the storage battery conference, or the vanadium industry conference in China in March. And you can't really see it here, but on that slide, they did a presentation. The Dalian Institute, they expected 180 in China. They expected 180 gigawatt hours of battery installations by 2030. That requires 1.44 million tons. That is all of vanadium supply out to 2030. And just in Q4, and in Q1 of this year, you can see that they just announced 2.6 gigawatt hours of new installations. And if you do the math, that's an extra over 10% of additional vanadium demand relative to supply upcoming in the next year or so. And so, look, I was in the lithium industry in 2013 to 2015 and even into 2016. And when I look back, the ones that came to the table were the Chinese. And they were ahead of the curve. And they were prescient enough to secure a lot of the lithium supply over that period of time, whether it was investing in Albemarle, investing in Greenbushes, looking at Lithium Americas, et cetera, all those prime projects in South America. They even looked at Quebec Lithium, and CATL got into that. They are starting to get into vanadium very, very hard just by the nature of this. And part of the reason is because 55% of the world's supply comes from China. And so a lot of that supply is in-house. And so we think this is really a green shoots of if we think this is a corollary and analogous to what happened in 2013 to 2015, and you roll into 2020 where prices went up 10x in lithium, we could be on that same trajectory over the next couple of years. And so this is I just want to go back. This is the structure. So Largo Physical Vanadium, we buy and hold it. Like I said, Largo has the technical advisor agreement and the safekeeping agreement. So Largo is a third party. They're also the largest shareholder of Largo Physical, but they're in charge of buying and holding the physical, putting the vanadium in the batteries and making sure that it's on. They're storing it and it's safe, and it's in the batteries to make sure that your product, the Van shareholders' product, is safely secured. Sprott is helping with the marketing and financial advisory, and it's going to be stored in commercial in warehouses very similar to other financial ETFs, right? Like the gold ETF, it's stuck in a vault. We keep it in warehouses, and like I said, it's either in the U.S., Canada, or Europe at this point, or it can be stored as vanadium electrolyte in the batteries itself. So this is the structure of what it's going to be like. So in summary, Vanadin, VANAF, is going to, this is a vehicle to invest in, without operating risk, financial risk, leverage risk, a way for investors to invest on a unlevered product to bet on the price of vanadium in the near term. And we have the physical vanadium. Like I said, we have 2.9 million pounds, million for Canadian in cash. And so we expect this to, grow this vehicle over time. That's why we put the base shelf prospectus and going through with that process. And so, we think that vanadium demand is going to increase over the near term, and this is an unlevered way to gain exposure. And it's dissimilar to exploration projects that have dilution risks, exploration risks, et cetera. It's actually buying the actual physical vanadium product. Yeah, go ahead, man.
What happens, say, global warming reveals a massive vanadium deposit somewhere, it becomes cheap and goes to half, a third. What is does it wipe out any book value you may have when you go to the quarterly statement? I mean, there's a downside to everything. And you have to start writing a check to people who are renting, because all this can come back to you if it's on a rental basis.
Yeah, so we should be trading it's on a net asset value, right? So if the vanadium is $9 a pound, it'll get marked to market on a quarterly basis in the financials. And if it's $3 a pound, it'll get marked that way as well. There's no check to be written, right? Because it's the rental fee is a percentage of the value of the vanadium at the inception of the contract. I want to be clear. Does that helpful or no? Yeah, I mean, okay. But I also give you. Let me put it another way. There has been one mine that's been built over the last 20 years in vanadium, and it's Largo. And it's the Maracás Mention mine in Brazil, and it's 7% of world supply, and that's been the only mine that's been built in the last 20 years. And
Congratulations
it took government support and offtake. It took Brazilian government support and an offtake agreement to actually get built.
Congratulations on your QX listing today. That's
Thanks, Tom.
Good news. And the stock trades very erratically. I'm wondering, is there any liquidity, or what's the float? And do you think that this QX listing is going to make a big difference in that regard?
Yeah, so you're right. There's limited liquidity, and we're starting this program now to get the name out. I think the company is not well known amongst many investors, and so we're starting that program now. But in terms of the float, Largo owns about 67%, and Delbrook Capital owns about 11%, roughly. So about 77% of the 17 million shares outstanding is owned by two large institutions. But there's obviously, that's why we're putting the base shelf in place. And if there's investor demand and the share price is greater than NAV, we could raise money, and the use of proceeds would be to buy vanadium. And the vanadium is a $4 billion market. I just give you rattle off the numbers. It's a $4 billion market. About 10 to 15% of it is spot. So it's sort of the spot market. It's the tail that wags the dog, but it's about, call it $400 million or $500 million in spot transactions a year, or $25 to $30 million a month. And we would be buying into that market.
So what percentage is coming from Largo, Brazil,
So the way
of the product?
Yeah. So the way it's structured right now, we bought 2.9 million pounds. 0 of it came from Largo. But Largo has provided, to the benefit of VAND shareholders or VANF shareholders, a ROFR, or right of first refusal. And so any uncommitted material from Largo on an annual basis, so that's roughly anywhere from 15 to 20% of their production, there's a ROFR that is given to Largo Physical Vanadium shareholders if there is capital to purchase that vanadium. Yep. Any other? Sure, Gib.
Can you go back to that slide with the Chinese conference? So you're saying that if that's right, these batteries are going to take 100% of all vanadium output between now and 2030?
Unless there's additional supply off the baseline this year.
Is all supply, not just excess?
All supply.
All supply.
There's about, so to give you a perspective, that's 1.44 million tons of V2O5 over the next 7 years. We're halfway through, but let's just use 7 years. That's 200,000 tons of V2O5 a year. The world supply last year was about 215,000. So it's roughly 100%. That just came out of the Vanatech conference in March. And then Ronke just raised in Series B financing. Ronke Power is a flow battery company. They just raised $150 million, led by Legend Capital. And they were an early investor in CATL. And if no one knows who CATL is, they're one of the largest lithium-ion manufacturers in the world. So hopefully that's helpful. And then we have a number of slides in the appendix, but happy to go over them at another time. Looks like we're running out of time, but
Jonathan, thank you very much for your presentation. Are there any other questions right now? All right. And on that note, Jonathan, again, thank you very much. As Tom said, congratulations on trading on OTCQX today. And thank you for your time.
Thank you.
Hello. I'm pleased to say that our next presenter is Brandon Smith, Chief Development Officer of Grid Metals Corporation, which trades on the OTCQB venture market under the symbol MSMGF, as well as the TSXV under the symbol GRDM. Grid Metals Corporation is focused on exploration and development for lithium, nickel, copper, and platinum group metals with deposits in Southeast Manitoba and Ontario. Welcome, Brandon.
Thanks, everyone. Pleasure to be here, and thanks for tuning in. So as mentioned, my name is Brandon Smith. I'm the Chief Development Officer of Grid Metals, and we are advancing critical metals projects in Manitoba, Canada. I actually started very recently, a week and a half ago. Prior to that, I was a equity research analyst at Cormark Securities, covering battery metals developer, mostly in the lithium space. So it's in my opinion, it's a compelling opportunity here at Grid. So that was kind of one of the reasons I joined. Usual disclaimers here, and I'll kind of first hop into the management team. So Robin Dunbar is the president and CEO. He's been with the company over 20 years. In my opinion, he's developed a very good portfolio of assets in Manitoba, which I'll talk about shortly. Dave Peck is our VP Exploration. So he's a PhD. He was former global nickel leader at Anglo American. So on our copper nickel stuff, he's a great person to have on the ground. And then Kerry Galischek is our VP in lithium. He actually worked at the Tanko mine, which is a current lithium producing operation in Manitoba for over 11 years. And he's written a number of papers on lithium. So he's also a great guy to have for our lithium assets. In terms of shareholders, we do have a number of significant shareholders, which I think adds a stamp of approval to what Grid is trying to do. So Lithium Royalty Corp, which is now a publicly listed company, they listed, I guess, just over a month ago. They own 15% of Grid. AMCI Group is a battery metals fund. They own 7.2%. They're based out of Australia. And Pat Murphy, who's with the fund, is on our board. Primero Engineering is one of the preeminent lithium engineering consultants out there. They did work for Sigma. They're doing work for Core Lithium. They do for Polbara and other names. So they're a great team to have in terms of expertise to eventually developing our assets. And then the management and board own 3%. So where we are, so we're in Manitoba, Canada, and we're kind of 150 kilometers south or northeast of Winnipeg. And in our view, kind of Manitoba is the gateway to the US and overseas markets from central Canada. And we should benefit from the US Inflation Reduction Act. High ESG in Manitoba, 97% of the grid is hydroelectric. And we're advancing projects near infrastructure. We got roads to our main projects, Donner Lake, which is our main lithium asset. It's 30 kilometers from hydro lines, and supportive governments and a regulatory regime. And so just on the three main assets that we're developing, so number one is Donner Lake, and this is, in my opinion, our flagship. We're targeting advanced development of the asset through a resource, which we expect in the next 4 weeks. There is a historical resource on the property, but nothing NI 43-101 compliant. So we'll get a resource out, and then the plan for that is to go right to a bulk sample with Tanko, which I'll discuss shortly. And then effectively try to enter a toll milling definitive agreement with the Tanko mine to be in production, best case in our view, in 2025. So just for some context on Tanko, that the Tanko mine sits 35 kilometers north of our project, and it's one of two current lithium producing mines in Canada. The other one is in Quebec, North American Lithium, owned by Sayona. So the Tanko has a lithium circuit, and we have a toll milling MOU agreement with them, and they're interested in processing our material through their mill, which could allow us to rapidly advance to production, and in my opinion is a bit of a differentiator in the lithium space in terms of developers, where if you have to build your own concentrator, it would take a lot longer than a couple years to get into production. So this project is 75% owned by us, Grid, and 25% by LRC. The other lithium project we have is called Falcon West, and it's a highly prospective area. We haven't done any drilling on it yet. We're in the process of getting permits, but we recently re-assayed historical drill holes, and we hit some, we assayed some good intercepts. One of them was 12 meters at 1.8% lithium oxide. There's another hole at kind of 12 meters at 2.2%. So good high grade holes. We do need to put some drills in there and see what actually we have, but it looks like it's a flat lying mineralized body close to surface. So we hope to be drilling that by the end of the year if we can get the permits in. That's 100% owned by Grid. And the final project we have in terms of our main ones is the Makwa Mayville, and it's a nickel copper project. There's aggregate 40 million tons there of a nickel copper, and there's platinum group metals as well, and a bit of cobalt. So it's a polymetallic asset. So we've been advancing that, and we're looking to put an updated resource there in the next 4 weeks as well to show the market a bit more size and something that can be more viable. We want to get it up to a bigger number to be big enough to actually build a mill and have something that's economic in this current environment. So first on the lithium stuff, which is definitely the big focus for us. As I mentioned, we do have that toll milling MOU with Tanco, which in my opinion sets us apart from most of the other developers out there. And then we added Falcon West recently, which we want to drill by the end of the year. So we do have a First Nations agreement with the Saugeen First Nation for our Donner Lake project. There's only one First Nation there, which, it's better dealing obviously with one group than multiple groups. So we're advanced with them to try to do the next step, which would be get an advanced exploration permit and allow us to do a bulk sample there. And then following that, we would go right to a mining permit into an open pit, and then, truck the ore 35 kilometers to Tanco to ideally be cash flowing by 2025 is our goal.
Where you are there?
So Winnipeg is like 130 kilometers. We're 130 kilometers northeast of Winnipeg. In terms of the local towns, I know we have roads right through our sites, gravel roads. I'm not exactly sure on the closest town, but I can get back to you after the presentation. Okay, and just on Donner Lake. So in terms of what we currently have there, there's 2 dikes there right now that we in the past year and a half have put 18,000 meters into those dikes of drilling. So that will inform our updated resource, which we expect in the next kind of 4 to 6 weeks. And there are also, we'll talk about it a bit later, but there's some geochem anomalies that are looking interesting. They're very high grade lithium and soil anomalies on the property that we ideally would like to drill by the end of the year as well. And we are also completing some MET studies, so we should have some results on that out soon just to determine the viability of putting this through a concentrator circuit. And SGS is doing our resource, and that will be out pretty shortly. Here's the two main dikes. So the 2 main dikes that we've drilled and we'll have, we're looking to define a resource on, are the northwest dike there and the main dike. So these dikes they're kind of, the main dike is 800 meters strike. The average thickness is kind of 3 to 5 meters. It's a bit thicker on surface. And the northwest dike is kind of 500 to 600 meters strike and 3 to 5 meters true thickness as well. So the thought long term is you can open pit this thing to start, and then you'd ultimately have to go underground. But given we have a toll milling MOU with Tanco, that kind of fast tracks us to being in production and allows us to ideally be achieving free cash flow and not having to spend 150 to 300 million bucks on a DMS concentrator or a flotation concentrator. And from the current studies we've done, it looks like it's amenable to low-cost underground mining. Like the host rock is very competent, so it looks like it probably is amenable to reasonable mining costs when we have to go underground. So these are just some of the drill holes from the main dike. I'll just point at maybe a couple intercepts. It is high grade and pretty consistent. So a few of the intercepts on here are 1.4% at 9.5 meters, pretty close to surface. 1.7% at 4 meters. So it's very consistent. They're pretty They're pretty vertical dikes. They just kind of keep going, and they're very consistent in terms of grade and mineralogy across the dike. And the main dike is also open at depth, and we are actually seeing some thicker, 1.5 meters at 1.5% over 8.3 meters, 1.4% over 7 meters. So decent thicknesses and decent grade. The Northwest Dike, this is the drilling we recently completed. And as you can see kind of at surface, we have some thicker intercepts as well, which is nice to see for, a starter open pit. So 1.5% over 14 meters and 1.5% over 8.2. And as I mentioned, the exploration. So last year they did some field programs. They ran some drone mag and did some lithogeochem work, and we uncovered some pretty high lithium and soil anomalies in a few areas on the property. We haven't drilled them yet, but the plan would be to look into doing that over an upcoming winter program. And I'll just, it's the same thing, basically exploration stuff where we see some decent geochem. Gloss over that slide. So this is actually the Tanko mine, which is, as I mentioned, 35 kilometers away from our Donner Lake property. And so we have an MOU agreement with them, which was signed in October of last year. And we're looking to do some ore testing with Tanko very shortly, followed by a bulk sample once we get our advanced exploration permit. And then, if we go to a definitive agreement, look to toll mill there and be in production. And Tanko is looking to expand their resource base, and that's why they're interested in our project. We're one of the most advanced projects in Manitoba. There's a few other names, but once we have our main resource out, we're probably one of the more advanced ones. So the team actually went out to site mid-May prior to me joining, but they actually saw things. The concentrator is running right now. Tanko is owned by Sinomine, which is a Chinese SOE. So they're currently producing the concentrate and shipping it to China, and they have a converter over there to produce lithium hydroxide, which goes into batteries. So the other lithium project, which is very interesting to us, is Falcon West. So this is 100% owned by Grid. As I mentioned, we have some historical assays there that we re-assayed recently, and the intercepts look good. They're close, they're near surface, high grade, 12 meters at kind of, close to 2%. Those are good grades. We just have to drill test. There are some pegmatites that are outcropping, and in between, there's no, we need to do some more drilling. So we're engaging with the First Nation groups on this one to get it permitted to drill, and the hope would be to drill this thing by the end of the year. This just shows the target, and there's a few, there is a pegmatite area that is historically been defined on the Ardon pegmatite and then the Lucy pegmatite, and in between, really nothing's been drilled. So we need to obviously do some work once we get that permit. This is just a slide on EV battery demand. I'm probably not going to go through it, everyone. If you're looking at lithium names, you probably believe in the EV theme. In our opinion, lithium is the binding constraint on actually hitting the penetrations that we need to ideally electrify the world. It's hard to bring battery grade, lithium carbonate and hydroxide online, and it's historically slower than every company forecast basically. So, and the one thing on lithium too, if you don't know, it's chemistry agnostic, where if you have a high nickel cathode, any of the chemistries, or a lithium iron phosphate LFP battery, they all basically use the same amount of lithium. Where obviously the LFP batteries don't use nickel, they don't use cobalt, and the various high nickel chemistries can be different ratios of nickel, cobalt, and manganese. So lithium's kind of the consistent one. So you're not making a bet on which technology wins out if you're investing in a lithium project. And so I guess just to summarize our lithium strategy, we look to be a dominant player in Manitoba. We do think there's a number of unexplored areas. There's unexplored pegmatites, there's other companies, and we do have one of two currently producing lithium mines in Canada. So we think it's a good place to be, looking to generate free cash flow through a toll milling agreement with Tanko, putting out our resource, as I mentioned, before the end of this quarter, and then look to do the met testing. News should be out shortly, and then look to do a bulk sample this year and go right into a mining permit by the end of 2024. And then if we get the mining permit by that time, then we can be in production in 2025 and free cash flowing. And in terms of Falcon West, we're going to continue to work with the First Nations there, get that that drilling permit, and look to drill that thing to see what we really have there. So I'll briefly touch on the nickel copper stuff, which in my opinion isn't getting much value in the stock right now. But we're going to have an updated resource out in 4 weeks or so. So I think it might put some eyeballs back on the story. So it does have a PA outstanding on Makwa Mayville. It's from 2014, so it's very, very dated. But the company has done drilling over the past few years, and this updated resource, with additional drilling, should define something a bit bigger. The company, Grid, has also acquired land around the two projects. So, we're looking to expand and basically build the resource base to the size we need to make this a viable project. Right now, it's kind of 40 million tons. Our thoughts are, if we get it up to 80 to 100 million tons, it's very, very viable. And there is actually an analog mine in Finland that's currently operating with kind of similar grades. So if we can get it to that size, we think it's a very viable project that alone should be worth, it's definitely worth something. So it is a magmatic sulfide deposit. So sulfide deposits are good to go to nickel sulfate, which goes into the batteries for EVs. And there is a shortage of kind of high quality sulfide deposits in the nickel space to actually get nickel sulfate into the batteries. There was minor production at Makwa in the 1970s, so it did produce at one point, and it is high metal tenors at both the deposits. So the recoveries and the concentrate grades are reasonable. And as I mentioned, I think the updated resource in 4 weeks maybe put some eyeballs back on this project. So here is the current resource. So at Makwa, you have kind of 7 million tons, nickel percentage of kind of 0.6 indicated. There's some copper, cobalt, and there's platinum group metals in there as well, and some gold. Or no gold. And then Mayville is bigger, it's 30 million tons. It has a bigger copper component to it, kind of 0.4, and then kind of 0.2 nickel. But if you put these on a nickel equivalent or a copper equivalent basis, it works out to, assuming you can get the recoveries, something that, should look very favorable. And so we do also have some stuff in northern Manitoba, which is kind of more greens fields. So I might not to go into that. I think the main ones for us are, Donner Lake, Falcon West, and then the nickel copper with Makwa Mayville. And then just to summarize in the year ahead, so we're going to keep advancing both projects, two resources in the next month, basically, and then with an eye to initial mining at Donner Lake in 2025, which would be a game changer if we can get there. And at Makwa Mayville, publish that resource, as I mentioned, and complete a new phase of exploration drilling and prepare for a new scoping study once we get it to a viable size. And we also are going to look to drill test some targets, maybe at Donner Lake by the end of the year that have the good geochem signature. And so that is it. Any questions?
Brandon, thank you very much. I'd like to open up the floor for questions from the audience.
Are there any discussions or conversations with Tanco about M&A with your company?
So Tanco, we obviously want to keep very close to them because, in our opinion, it's a bit of a tricky situation with Sinomine owning the Tanco mine, and also Sinomine did have to divest their stake in Power Metals, which was a lithium developer as well. So we're not really sure what's going to happen there, but our thought is keep close to them. They seem interested in our ore to feed their circuit, and just see what happens. But everything would be on the table, obviously, and we're open to anything if something comes about.
Thank you. Anyone else before we go to the online audience? All right.
Brandon, there's quite a few questions from our online audience. There's several about capital. whether it's the need for how much is needed for initial mining, what's your current balance, and how it is aligned with your current plans.
Yeah. Okay. So currently there's just over 6 million Canadian cash. So, that definitely gets us through this year. I don't think we have numbers out in terms of what, if we get to, mining the Donner Lake project in 2025, but effectively, there already are roads into site. It's just an open pit, right? Like you need to drill it, you need haulers, you need that kind of stuff. But in terms of major capex items, there isn't major capex if we need to get to initial mining there at Donner Lake. So we are funded to the end of this year and beyond. Just a question of if we want to advance drilling quicker than we currently are, or how things evolved on the advanced exploration permit to get our bulk sampling with Tanco will kind of allow us to figure out exactly when or how much we need to raise. But for now, we're in a good spot.
And then somebody's asking, are you able to access any government funding or grants, programs?
Yeah, well, I'm not sure. Yeah, I think there are some we've applied for. They're not large programs, but given the work we're doing, like if we want to embark on a big drill program, I think the thought for us would be to leverage the flow through market where you can see premiums and above your stock price to get flow through dollars for your drilling. So that's probably where we would go to get the real dollars versus grants or government funding for now.
Okay, next question is asking about if you're thinking of being in production with Tanco during the first half of 2025. Is that the goal?
Yeah, so that's the goal. So maiden resource in 4 weeks, get our advanced exploration permit by the end of this year, which allows us to do a bulk sample, which effectively allows you to create a small open pit because you've got to mine the ore to get it effectively milled at Tanco. And then from there, get your mining permit by the end of 2024. And that just allows you to make a bigger open pit, right? And that open pit should, our thoughts are the first kind of 2 to 3 years of the agreement could be from the open pit, then you probably have to go underground. But for the first couple of years, you could be free cash flowing with minimal capex.
Okay. And when is the PEA projected to be completed?
So we're still discussing a PEA post the resource, or if we jump right into a PFS. Given it, the first stage of this open pit is very simple. It's, we're not building a concentrator. We're just going to have an open pit. So there's still some thoughts on if we go to PA or PFS, which would, impact the timing. So no timeline as of now, but where we are thinking about it, and we'll push into that once kind of the resource is out.
And how many meters will you drill, and what is the total cost per meter?
Yeah, so we in the last, I guess, year and a half, we've drilled close to 20,000 meters at Donner Lake, and that'll inform our updated resource. My understanding is the drilling cost is kind of $200 to $300 per meter. We don't have a drill budget for this upcoming winter. It depends on the permit at Falcon, and it depends on if you want to drill those geochem targets at Donner Lake. So we don't actually have a budget right now, but that's being worked on.
And will the Manitoba government fast track permitting?
So the last mine that was actually permitted in Manitoba was a Hudbay Reed mine, and that they actually followed the same process that we're looking to follow. We're using the same environmental groups, engineers that they use to get their permits, and they effectively did an advanced exploration permit for a bulk sample, and then went into a mining permit, and they were actually milling their ore somewhere else. So we're following that approach, and we think, I don't know if it gets fast tracked, but a year for a mining permit, we think that's realistic, and that can be achieved.
Are there any other questions from the audience? All right, Brandon, thank you very much for your presentation. Again, if you'd like to meet with Brandon, he will be available for about the next hour. Brandon, thank you.
Hey, hello. Our next presenter is Terry Lynch. He's the Chief Executive Officer of Power Nickel, which trades on the OTCQB venture market under the symbol PNPNF, as well as the TSXV under the symbol PNPN. And Power Nickel is focusing on nickel projects in Canada. Welcome, Terry.
Thanks very much, John. Good to be here today. Beautiful day in New York, and great facilities here to be at, and sort of seeing the harbor up front. So we're going to quickly wrap you through the Power Nickel story. It's a very exciting story right now. It's a great time to be looking at Power Nickel from an investment perspective because we've had a heavy news flow in the last few weeks, and it's going to get busier. So it's always good to be getting into these deals when the news is flowing. So we'll talk to you about what we perceive as being the world's first carbon neutral nickel mine. Standard forward-looking statement. We're not going to tell you anything we don't think is true, but it's always good to do your own due diligence. I find in investing, I make my best returns when the macro and the micro are aligned. So what do I mean by that? Well, by the macro, I mean, if you look at the chart in the top left, we're talking about the commodities to equity ratio. So right now, the commodities are down in the bottom right-hand corner there, and just starting to turn up. And you can see when they really rip hard up the ladder, and you want to be in the boat coming in, the tide that's coming in. So, and what's interesting is not just a graph anymore, because we're seeing, massive financial commitments, following that graph. So within the commodity space, the battery metals, in my mind, are the best to be in. And the commitments are significant. In the battery sector alone, in the last few months, we've had over $50 billion in commitments to build battery metals plants in North America, the United States, and Canada. Shovels are turning. This is happening. So those plants will be built. There will be demand for those materials. It's not a theory anymore. Why is this happening? Well, generally, it's driven by the government strategies that have been proclaimed around the world. In the United States, the Inflation Reduction Act, which has set out some pretty lofty goals in terms of what they're trying to do with climate change and how they might get there. So they're getting there by providing massive incentives to consumers to change their purchasing behavior to buy electric vehicles, and particularly electric vehicles that contain certain amounts of North American content. Now, the North American supply starts fairly simply, like 40%. Then, within a few years, it's up to 90%. Well, you can't get there, for example, without North American nickel. It's not just in the United States that this is happening. It's also happening in Canada. In the last federal budget in Canada, the Canadian government has provided a 30% tax credit for critical mineral, building a mine and equipping it. Just before the federal budget, about a week before, the Quebec budget was out, and it provides up to a 25% tax credit. So my $400 million high sulfide nickel mine is now going to become less than $200 million for our company. So that's a $200 million gain. Our market cap is like, $30 million today. So that's a profound impact. It's happened across the board, not just for Power Nickel, but for other major companies in Quebec. And it's something that financial markets haven't quite picked up on. I suspect the regional banking crisis sort of caused people to overlook this, but it's a significant change, and financial investors should be aware of it. So that's the macro backdrop, which is, of course, very rosy. Let's talk about the micro. So I'm going to walk you through a slide. I don't expect you to read that comparable sheet. We'll get to another slide on that. But what it sets out is it sort of shows that when we compare ourselves with our peers in the nickel sulfide, high percentage nickel sulfide mines that are undeveloped in the world, we basically are trading at between a fifth to a 20th of the value of our comparable peers. There's a number of things that are going to happen that will change the outlook on that. Generally speaking, we're going to be updating our 43-101 probably in July, and it'll go from right now a historical resource of 3.1 million tons to somewhere between 8 to 10 million tons, which will be more than enough to make this mine commercial, and that's just the start. How that will get there is we're continuing to update and release drill results. We released results just yesterday, which we'll get into in a second, but they'll be coming every 4 to 6 weeks. This is stuff that's already been done, that's in the hopper, that's coming through the pipe. And what's interesting is that this is just going to be the start. We've got one pod that's going to be this 8 to 10 million tons, but every single nickel sulfide mine in the history of time is always a multiple pod scenario. So when Mother Earth, burps up the nickel to the surface, she does so in several belches in the general geographic area. So analog stories in Canada for ultramafic high-grade nickel sulfide mines would be Lynn Lake, which is 22 million tons, and Voisey's Bay, which is over 50. So we fully see ourselves being in that 20 to 50 million ton range, which will make this ultimately $1 billion project. Where is it located? We're in Quebec, Canada, and inside Quebec, we're about middle of the province, just a little south and east of James Bay. Quebec, in my mind, is the #1 jurisdiction in the world to be looking for critical minerals today. It's a bold claim, but the reason why I would say that is sort of threefold. Quebec's done an amazing job of meeting with, educating, and partnering with the local community groups, getting alignment with the Aboriginal partners, in this case, the Cree. So in our immediate vicinity, within about 100 kilometers of our mine, there's 4 mines being built or built. So that means you got tremendous community support for mining. The other thing they've done a really great job is over the years, they've built up a pretty significant infrastructure package. So we're immediately off a 4-lane highway called Route North. Right across the road from us is a Hydro-Quebec substation. So that'll be providing us cheap green power to power our nickel mine. And we're just 8 kilometers outside of a small city called Nemaska, which has an airport and supply chains to service the other mines. So it's really good from an infrastructure perspective. Our drillers go down home at night from the drill crew to a beautiful 4-star Cree resort-owned lodge. So it's pretty. If you've been up at the high Andes in Chile in a metal camp, it's quite a nice feature for the drillers to be able to do that. The third and probably the most important point about Quebec and why it's such a fundamentally great place to be exploring for critical minerals is the financial incentives are fantastic. So just recently we closed a $5 million or roughly $5 million financing where we raised the money at a 50 cents unit with a share and half warrant at 50 cents. When we announced the deal, the stock was 28 cents. You say, well, how can you raise money at 50 cents and your stock's 28 cents? Well, that's the miracle of Quebec. So how you can do that is that basically high-end Quebec-based taxpayers buy the placement at 50 cents, and they take the tax credits and the tax deductions that are available with that. They immediately sell it to your ultimate holder, the investor, that's got a long-term view of the investment. He's buying at 25 cents. So the investor that bought the first case, he reduces his tax payable from about 54% to about 42%. So that's his win, 12%. The investor that puts in 25 cents has 50 cents working for him to de-risk his investment. Good win for him. Obviously, from a company perspective, we're diluting at 50 cents, so it makes all of our existing shareholders happy. We've got the capital to work with to advance the project going forward. And of course, government gets to get its money allocated in the critical mineral sector, which is what their strategic objective is. So that's why Quebec is such a phenomenal place to work today. When we opened up, we talked about being the world's first carbon neutral nickel mine. It's sort of topical these days to wrap yourself in the environmental flag, and nothing wrong with that. However, you need to sort of follow through with that. And the reason why we do this is as much economic as it is environmental. We think there's going to be a premium available for clean nickel. And it's a strategic competitive advantage that we have with our location in Quebec that we can deliver probably the world's first carbon neutral nickel mine. How do we do that? Well, we start first by, our major CO2 impact right now is drilling. So we offset our drilling costs by working with a very innovative company called CarbonX. They provide very cost-effective Verus certified credits that we buy and offset our drilling. So our drilling costs went up from 200 a meter, 200 to 225 cents. So a full 25 cents more, and we're carbon neutral. The other thing that we do, obviously, we're located where we're able to access the hydro grid, which has got green power. So obviously, going to be powered with clean green energy. We're at some. We're now looking at how we would actually develop the mine, and there's 3 main areas that you could do. You could hydrometallurgy, smelting, or chemical metal vapor process, and that last one is much more environmentally friendly and it's been used extensively around the world. I think that'll be probably what happens here. Fundamentally, the other big positive for us is that we have an ultramafic deposit, and ultramafic deposits naturally sequester carbon. So that's a real plus. So at the end of the day, we think we'll be able to deliver this. And what that will enable from a pure business perspective is if you can imagine your General Motors and Ford, and I'm just using them as an example. And General Motors makes a deal with Power Nickel and buys clean green energy, and Ford buys nickel from Indonesia. Well, the simple facts of it is laterites require a lot more CO2 to process and to create into nickel. So you can imagine if GM is trying to, duke it out and win, they're going to say we're using clean green energy, we're not polluting the environment, and those guys are. It's that simple. So that's why you'll get a premium for clean green energy. The environmental wrap is great, but only to the extent that we are able to have a mine. So it all starts in mining. It's always about the ore body. So we started off with a pretty fantastic acquisition, was a 3.1 million tons of about 1.6% nickel EQ. We then followed it up by proving this historical resource existed and was actually accurate by drilling 8 holes, and 7 of the 8 hit. And getting great intersections, sort of 18 to 27 meters of, again, 1.5 to 1.6% nickel EQ, very good grades. That encouraged us to go ahead and lay out a plan to sort of make this commercial. So we ultimately plan to drill 30,000 meters around this particular pod, and we're about halfway there. The results have been fantastic. So we posted a 43-101 in August of last year that was 4 million tons at about $8 nickel, 5 million tons at $9.60 nickel. In September, we had to pull it. And the reason why we had to pull it is that, unbeknownst to us, and our QP was from Quebec, in Ontario, Quebec, it would have been fine. But because we were a BC reporting issuer, the BC has an obscure rule that if your metallurgical studies are more than 10 years old, you can't use them. So our study was done when the initial 43-101 was done in 2006. So we couldn't use that. We were unaware of that. And we were already working on a full new metallurgical study, which will be ready in about sometime in the next month. And that'll be used to incorporate in our new 43-101. But we sort of know, of course, that the rock is there, that we started with like 4 to 5 million tons already ready to go. So this particular hole in the middle of 2209 was about 40 meters of about 1.6% nickel EQ. That's a top 5 hole in nickel anywhere in the world. Really, truly a signature hole. We followed that up with the next set of assays that showed 10 meters of about 3% nickel EQ. And just about 3 weeks ago, about 16 meters of about 1.6% nickel EQ. All those holes were 150 meters, 90 meters, and 80 meters of strictly new resource area. So that adds tons of tons. And this is sort of what we sort of see the nickel body looking like. We call it the river of nickel. And you can see it's quite squiggly, sort of like the Mississippi of nickel. Comes down from just about 200 meters down, goes up to the surface, and then back down. And you can see the bends are pretty important because they contain a lot of nickel. This gives you a perspective of how this looks over about a kilometer. And you can see the widths that are happening there. And in the next slide, the grades. So when you're testing and you're trying to develop an ore body, if you think of it, the concept of the river of nickel, you're always hoping to have the widest river possible and the deepest, and the most cloudy being the highest grade. The reality is the ore body is the ore body, but you test it by sort of pushing the extensions. So you're never going to drill 100% of your holes successfully. By nature, you need to miss because otherwise you haven't tried to push the ore body far enough. So we're running about 60%, which is amazing, for an ore body exploration. But that gives us the confidence now to know that, with these next 2 rounds of assays that will be coming between now and the end of June, that we'll be able to, move this 43-101 probably to the 8 to 10 million ton range and make it commercial. As I said, we think that's just the start. Our land package is about 45 square kilometers. The ultramafic sequence, which starts at Nisk, Maine, in the middle of your screen, it now extends a full almost 5.5 kilometers. Just yesterday, we released an amazing result, full 5 kilometers away from our core ore body. We drilled a wildcat hole, and we came back with almost 8 meters of 1 ounce PGMs, so platinum and palladium. So they sit over top the massive sulfides and in the ultramafic sequence. So quite an astounding discovery, really. And the type of discovery that you associate with really massive nickel discoveries like Norilsk or Voisey's Bay. So it gives us a lot of excitement to think that between our core discovery and there's obviously a lot of sequence to discover. We just recently flew an airborne EM over that, and massive sulfides are quite magnetic, and airborne EM is a great way to indicate if it's charged. And those things lit up in a pretty exciting way. So we're super stoked about that, and we think that really augurs well for how big this project can be. How are we going to find the rest of the pods? In addition to using conventional techniques like airborne EM, downhole EM, IP, and gravity, we're using something fairly new. It's called ambient noise tomography. It was brought to North America by Elon Musk to Talon Metals, where we first discovered it. And basically what it is sound mapping. So that little silver thing on the left-hand side of the picture is called a geode, and they put that geode in the ground. It sends a pulse of sound down about 2,000 meters. It comes back as a sound map. And then what they do is they correlate those sound maps with your hard scientific data. So for example, that hole where we had 40 meters of 1.6% could be associated with a very particular sound map. So it creates a signature, okay? And they take that signature and they say, okay, where else is that signature present in this data stream? Because they'll map our core area, but also start to expand that full 5.5 kilometers on the ultramafic, and then through the 45 square kilometers, looking for these signatures that we correlated to the ultramafic massive sulfides. So can it be below? Could easily be below. River often has stacked systems, so we could have 2 or 3 rivers underneath this one. Could also be adjacent. And obviously, clearly we now see there's something at the far end of our ultramafic sequence. So we think this will really enhance our speed of discovery and allow us to drill much more cost effectively, obviously impacting the environment less, drilling more cost effectively, and enabling us to drive the resource size up in a much quicker way. If you buy into our data that we're distributing through the assays, and with our confidence in saying we're going to upgrade this thing to 8 to 10 million tons, and this is just the beginning, and we're going to get much bigger, then this slide is a very compelling one, because it gives you the valuations of the other nickel sulfide mines in the world that are undeveloped, that the market perceives as commercial. In mining, you're a zero until you're a one. So you're basically an exploration play that's really not worth a ton until all of a sudden people say, oh, you know what, that can become a mine. And at that point, you start to shift in valuation, okay? That hasn't happened yet for Power Nickel. It will happen, in my view. It's inevitable because the drill bit is working. And if that happens, then, this is where, when I said there's short-term upside of 5 to 10 times where we're at, this is where the math comes. It's not some, fantasy in my head. It's the reality of the math. The math will suggest that we're extremely undervalued, and the market doesn't like to have that, especially since we're, without doubt, probably in the best jurisdiction of anybody up there on the comparables list. So the action plan for NISC, pretty simple. Continue to release our drill results that we've done over the winter and fall of 2023. We're going to announce a spin-out, which I'll get into more in just a second. That'll be a bonus for our existing shareholders. We're going to release our airborne EM survey, which should help to show people how much prospects we have for adding a lot more pods. We'll release a metallurgical study, which will give people comfort that not only do we have great tonnage, but we can actually process this tonnage into mineable material. We'll continue to use all the advanced techniques we can on the scientific side. We're a big believer in measuring twice and cutting once, cutting being the drilling. So we'll start to do that, and we'll expect to be drilling again in early July, probably mid-July. It's interesting with the ambient noise tomography. Within a week of it being on the site, it goes on the site in early June, we'll have data that we can actually start to identify new targets. And then finally, we'll obviously get the NI 43-101 update out in early Q3. And that should, if the stock hasn't moved before then that will be the checkered flag event. And then we expect to deliver a PEA or better by Q1, Q2. Before I move on from the nickel market's changed quite a bit, and it used to be the only sort of option for juniors like ourselves was to, ultimately prove up a resource and sell it to, BHP, Rio Tinto, Vale, Wailu, whatever. And that's still an option, of course. But what's interesting is now people that used to buy from those very same people are coming now to the miners, the automotive companies, the manufacturers of the high-end nickel powders, anodes, and wire. And they're coming to us and they're saying, hey, you know what? we need to tie up our sources of supply. We'd like to get in the mining business. And they're coming. And in some cases, I'm dealing with a multinational private company I never even knew existed. A banker introduced me. And they've got 17 plants around the world, mines and these finished product plants. Their customers are, the U.S. Department of Treasury, U.S. Department of Defense. They provided the collider nickel to the big collider, and they're the highest quality manufacturer of nickel in the world. And they're looking and saying, look, we believe you're going to be a mine, and we're prepared to put up the money to perhaps take you through feasibility. And what do you think of that idea? And not only that, the economics in nickel is really in the chemical side. The mining side, is okay if you have a great discovery, you sell it. But the guys who are really making the money are turning it into the products. They're making most of the money. So they said to us that they, right now, LME might be, I don't know, 27,000, something like that. I didn't look at it today. They're getting like up of 90,000 a ton for their nickel products. So it's triple economics. So it's amazing. Cost difference from a base nickel sulfate mine would be about 225 million to 400 million. So obviously an extra 150 million, you get into a much better economic structure. And now you got the Canadian and federal and Quebec governments saying, we're going to give you half through the tax credit programs to do that. So it's an amazing, exciting time to be in nickel for sure. Generally, I would say people should buy the stock because you believe in the nickel story. If you like the nickel story, you're going to like the bonuses I've got for you, because we're going to spin off our copper gold subsidiaries. They're not inconsequential. We used to trade at the levels where we're at right now for our copper gold subsidiaries. I think the copper gold exploration programs will come back and have a life because we need lots of copper and we need lots of gold. And we've got some pretty interesting projects there. So we're spinning off our project first in BC. It's that yellow project there. It's called Golden Ivan. It's never been drilled. It's right beneath the Scotty Resources, a very fine junior gold company, and just above Strike Point, which is also another good gold silver play as well, and just about 2 kilometers away from Ascot, which is building a mine. So always a very prospective place. So this is what a recent survey did on that. Sampling showed 3 half-ounce gold at surface, never been drilled. Again, highly prospective project. What will that be worth in the spin-out? We'll probably value it somewhere between 10 to 15 million, and we'll probably raise about $1.5 million separately from our treasury, for the Power Nickel treasury. And let's say we keep 88% or so. That's what we're thinking. Well, 66 will stay in the company. 22% will be dividended to our shareholders, giving them about a $3 million bonus in stock, the first bonus. And then the second bonus will be in Chile. Interesting enough, in Chile, when I was going through the due diligence on the ambient noise tomography, one of the things that we noted was that the success of the ambient noise tomography has been in West Australia. That's where they pioneered. This is an Australian technology, Fleet Space Technologies. And they basically, I know West Australia is like a desert like Chile. And the biggest problem with desert exploration is caliche. Caliche is just a mineralized limestone, sits in the base of sand dunes and obstructs IP and gravity feeds, which is generally how you get a regional view of your geology. But this ANT, the ambient noise tomography, doesn't have that problem with caliche. So for the first time ever, we can perhaps get a real reading of the areas here, because we've had some major hits with our Chile projects. We've just never been able to find the source. So we're excited about sending our geodes down to Chile afterwards. And what we're doing with the Chile is, as soon as the new pubco is ready, it will acquire all the Chile properties. There'll be a fairness opinion that'll come across. And again, we'll kick out a piece to our shareholders, and the rest we'll keep in ourselves. And generally speaking, the reason why we're not doing it all at once is it would cost about $300,000 more, and it would take about 3 more months of time and grief, my time, and I just don't have the time to. It's not a priority for me to do it that way. Better to do it this way, way more efficient. Last asset that you get a bonus on is we've got a fairly serious royalty in the company that almost nobody knows about. It's basically on a 100 million ton ore grade copper moly that we sold to Teck for $3 million some years back. We have a 3% NSR. Teck has the first right to buy 1% for $3 million. And our expectation is we'll probably be able to sell this in Q3 for between $5 to $7 million US. So a nice little kicker for us. Management team is pretty lean, just myself and Jimena on the operating side. We use, for example, in Quebec, a company called GeoVector. They're an amazing scientific team, very successful. Joe Campbell's a bit of an industry legend. And, Adam Finley and Eric here, they're just we couldn't hire those guys. We certainly don't have enough money, but we can rent them, and it's cost effective to do so. We use another company like that in BC called Apex. And in the other board members, Greg McKenzie was an ex-investment banker. Peter's a retired lawyer and less a successful businessman. And the board owns about 4% of the company stock. So they've been supportive all the way through. Myself and my family own about 20%. The last two rounds in November of this year and just recently, we were the biggest shareholder in both rounds. And our core group here of Critical Elements, Durin Family, BT Global, and Palace Capital, who are respectively the top 5-year and top 1-year hedge funds in the country, participated. So our core group has continued to buy 65-70% of each offering. I always find it encouraging as an investor to see management eat its own cooking. So it makes me believe that they believe. So yeah, that's our story on the financial side. So we just raised $4.8 million, so we're in good shape financially. Just to wrap it up, Power Nickel has got a major nickel sulfide discovery. We're trading at a deep discount to our peer group. Obviously, the Joe results have demonstrated that this thing has got a lot of legs, and looks like it could grow into a very big project. The analogy would be Lynn Lake at 22 million tons and Voisey's Bay at plus 50, and why can't we get to be one of those guys? We're going to start another 15,000 meter fully funded drill program in mid-July. And we'll be using the ambient noise tomography and the other technologies to identify the new pods and go after them and cost effectively drill those and report them. We're in the battery metal space, which is probably the best commodity space to be in. We're going to have a nice bonus kick out for you guys with the spin out. And obviously we're in Quebec, which provides tremendous 2-for-1 financings on the exploration side, and now basically potentially subsidizing up to 50% of our mine development and equipment costs. So it really is a tremendous time to be looking at Power Nickel. And at that point, happy to take any questions if that's okay.
All right, Terry, I think we have just a minute or two left. So any questions from the crowd? All right. We do have one question from the online audience.
So Terry, one of our online investors, is asking if there's anything you can do about the shorters. It appears they keep down ticking it just before the close.
Yeah, that's a pandemic in junior mining. I started Save Canadian Mining with Eric Sprott, and Keith Nurmeyer, and Sean Rose, and many others to deal with this problem of naked shorting. So what we're doing, we've got a very specific plan, 3 parts. The spin out is one part. That spin out will be listed on a separate exchange. So we're going to be a hard break. Won't be able to do the fake paper trades. Second, we hired a company called Share Intel. Share Intel's got a very advanced program that allows them to get CDS and Broadridge data to analyze it and show on a linear micro level what broker, what account is naked and offline, and the amount over a course of about 8 weeks. We expect to have that report in about 2 weeks or so. And that report would allow us to send that information, which is evidence that we could bring to court, to the compliance department of those short brokers and say, guys, you're probably unaware of this naked short in your house. Now you're aware. Here's the evidence of it. And we get this evidence every 2 weeks now. So please correct it. Otherwise, you're now complicit in this crime. That's proven to be effective. It's just a new technique. We're going to roll that out. Finally, the third thing we're going to do is we're looking at listing on a new exchange called Upstream. And the reason why we'll do that is we basically fundamentally believe we could take a big chunk of our stock out of DTC and CDS and put it in this digital exchange, because the brokers loan your stock out. Even if you tell them not to, that decision is made above their pay grade, and it just contributes to this naked shorting. It's wanton. It's a massive problem in the sector, but that's our plans to deal with it, and we think it'll be effective.
All right, Terry, thank you very much. If you have any other questions for Terry, please approach him outside and set up a one-on-one meeting. Terry, again, thank you for your presentation.
Great, thanks, Dave.
Hello. We're very pleased to welcome our next presenter, Craig Alford, Chief Executive Officer of Titan Lithium, which trades on the OTC markets under the symbol CDSG. Titan Lithium is pursuing a lithium project in Tanzania. Welcome, Craig.
Great to be here. We also have a lithium project in Nevada, just to say that. I stepped into this company just a while ago, and this project that you're about to see is very new. We discovered it essentially in January. I was out in Tanzania through February, and results are still coming in. The picture to the left is actually from the West End lithium claims in Nevada. Now, you probably don't need to see this, but I could say something maybe that'll help you with metrics in the future. Current lithium production worldwide is about 160,000 tons. And the demand for electric vehicles is almost taking 90% of that or more. Each car has about 10 kilograms of lithium in it. So you can kind of do math. Last year, 10.3 million cars were sold, electric vehicles. And so the industry is just keeping up with this. So obviously, what needs to happen is new lithium mines have to come online, which is not an easy thing usually in Canada or the US. There's a lot of environmental hurdles to go through. There are some good quality projects, but the world will really look forward to new viable projects. Some recent market movement have been acquisitions. Recently, there was China National Resources announced plans to take over a project in Zimbabwe for 1.75 billion. Albemarle tried to acquire Liontown Resources for 3.7 billion approximately. That has been rejected. However, I wouldn't be surprised if they go back to the table. Lithium Americas has successfully acquired Arena Minerals as well as the acquisition of Millennium Lithium Corporation recently. So I wouldn't be surprised though if someone's willing to gobble up Lithium Americas. Its market cap is 4.3 billion, but look at Albemarle and Livent, etc. So this is going to be an interesting period over the next 5 years of a lot of M&A in this space. Okay, so we are in Tanzania. Now, you may wonder, why the heck go over there? Well, if you go to the southwest US, you'll see a really good model, which is the Thacker Pass deposit for a clay-hosted lithium deposit. And when you look at why it's so important, it's because of the type of volcanism that occurred during the Tertiary in southwest US. Well, that type of volcanism is occurring today in the East African Rift. The East African Rift is separating the Horn of Africa away from the plate. And as that has gone on, you have a lot of light element rich volcanism. In fact, in Tanzania, a company called Helium One have discovered about 15 billion cubic feet of helium. If you remember your periodic table, you've got hydrogen, helium, and the next lightest element in the universe is lithium. So there's a lot of light element rich volcanism happening in the area. Where we're located is just southeast of Mount Kilimanjaro, which you may have heard of. It's the tallest mountain in Africa. It's a beautiful mountain, but it's also a stratovolcano that has belched out millions of cubic kilometers of ash, clouds, etc. It is fairly lithium rich, as well as there's a type of volcanism in the area called carbonatite, and that's also very lithium rich. I wouldn't be surprised if we actually have a helium deposit as well within the area. The sort of U-shaped white line outlines the Pangani Valley. It's a rift valley. It's basically served as a catchment for all this tufaceous material, lithium-rich material, over the last, say, 5 million years. Where we're located is in the southwest quadrant of it, in a playa. These playas are just the same as you might see within the southwest US, and I illustrated that in the first picture. The country, it's part of the WTO. Recently, Kamala Harris visited in a push and she actually mentioned battery metals in particular. Tesla has recently done a deal for anode materials within Tanzania. And where we're located is got exceptional infrastructure. We're near paved roads. We're near the Kilimanjaro International Airport, which has direct flights to Europe. We are 200 kilometers, so that's about 140 miles by rail to the port of Tanga, which is the second largest port in the country. So we're in a wonderful spot, and we're also in a spot that had no prior lithium exploration. Back in January, on the left-hand side here, we took some sample lines. And the reason we did this is I've worked in Nevada, as well as the engineer who's based in Tanzania. He's worked in Nevada. We've looked for lithium in clays, lithium in brines in Nevada. We went out, started sampling, and we started off with about 9 miles of high-grade results. And we said, okay, let's go east and west, let's go north and south to define this anomaly. Where are the edges of this anomaly? So we continually added more lines. You can see the yellow line in the center is 22 kilometers long. Sorry, I'm Canadian, I work in kilometers, but that's quite big. And we've extended it, and we still haven't found where it ends yet. But it is enormous and very rich. Some of the lowest values we had were 600 ppm, and some of the highest values were over 10,000. Put that in perspective, if I was working in Nevada, my soil anomalies would be in the order of 200 to 400 ppm, and we hardly even find areas that low. So I contoured the results recently to take a look at the size. What you see here is Thacker Pass on the top right, and the TLC project of American Lithium on the bottom right. Thacker Pass, total resources that are contained within that red line. I just want to say the colors do not indicate grade. They indicate measured, indicated, and inferred resource categories for both the TLC and Thacker Pass. But as you can see, the Thacker Pass, which is the largest clay-hosted lithium deposit, at 19.1 million tons, with a grade of 2,036 ppm. And there's the TLC project, another excellent project, which has a grade of 790 ppm lithium, hosting 10.7 million tons LCE. LCE stands for lithium carbonate equivalent. So our project is looking very well in terms of size. We have another project called Titan 2. It's northwest of Titan 1. It also sits in a fault-bounded sort of catchment valley. We have a dried lake that we sampled on in a grid. The results, again, came back extremely impressive, having a huge area of 4,486 ppm lithium. And I just wanted to compare it against the pit area, which is a 40-year mine plan pit of Lithium Americas, and that averages 3,160 ppm lithium versus our 4,000, and it's roughly double the size, that red area. So getting back to the actual size and scale of this thing, I've compared it against Manhattan. For everyone here, I think might know that place, and it's not in New Jersey. It's in Tanzania, but you can see the size is actually covering 65 square kilometers. Now, this is where I play a little bit of a advanced, is I look at 15 meters thickness. I know that valley to be quite thick. There's been 6 seismic lines done across the valley where it's hosted, and we know it to be 3 kilometers thick. But I'm just being very conservative here. I'm taking 15 meters and seeing what kind of resource would be generated from such an attempt. And I get 38.6 million tons LCE. How that compares against other projects in the world, I looked at Thacker Pass, Tonopah Flats, the TLC project, Bacanora in Mexico, and Clayton Valley. That's not the classic Clayton Valley with the Albemarle production, and Rowlett Ridge. Rowlett Ridge is interesting to note because the U.S. government gave Ioneer a $700 million loan to forward that project with a further $300 million line of credit. So they really want that one to go into production. We look at the grade, sort of center, that so far Titan 1 only grades 4,376 across that 65 square kilometers. And if what I think is all true here, it's going to be the world's largest lithium deposit. So I'm more than excited to be working on this. We're going to be drilling this year. We've already hired and talked to a group. They're African-based. They're actually partly run by the government. We feel that will be the way to avoid a lot of the social issues that you might run into, bringing in a crew from, let's say, US or Canada. And if we look at our market cap right now, we're extremely small with what we think we have. I look over to the right here. I'm comparing market cap versus resource size in sort of an orangey color and grade. And if we take a look at, say, LAC or LAC, which is Lithium Americas, or OCF, which is Alchem, we are very favorable. And I hope everyone can follow us as we proceed. This discovery was just in January, and we're still getting our results. So next week, I imagine more news. Thank you.
Greg, thank you very much for your presentation. I'd like to open up the floor to questions from the audience here. All right.
How does the clay extraction process differ, or does it from a spodumene or a brine?
Okay, so currently spodumene production is your typical mining grinding. However, there's some roasting involved because you got to elevate your spodumene mineral from a alpha to a beta before it can be really work along with chemicals. But that is normally sent off as a concentrate. And right now, the world basically sends its lithium spodumene concentrate to China for the most part for further work to bring it into a lithium hydroxyl or carbonate in order for the battery makers to use it. Whereas the final product from clay deposits is a hydroxyl or lithium carbonate. So it's more amenable actually to the battery industry.
Anyone else?
Can you give us a little color on your share structure, money in the bank, percentage of management?
Sure.
Ownership?
Yeah, right now we're 260 million fully diluted. However, about 160 million of that is restricted, 2-year restriction. When we did this deal, we didn't really know what size this was ever going to be, but we had a fairly generous offer, mostly in shares, to do this deal, to bring it in. I've worked with this man that actually was the prospector for the last 13 years. He's a PNG. He's got an MBA. He's also addicted to prospecting. So he went out and found this. Currently, we have a market cap around 30 million or so, fully diluted. And we're looking for funds. We're looking to raise capital for the next stage, really, for drilling. We operate fairly cheaply, and prices in Tanzania are typical world style per meter charges for drilling. So we should be effective if we can raise around 3.5 million to bring this to the next level. I want to drill to see how deep this goes, obviously. I'm hoping it doesn't go 3 kilometers because that would be the end of the value of lithium for the world. It would be too rich. But I think within the top 400 meters of this valley is our main target. And I wouldn't be surprised if I have pulsed values because of the nature of volcanism in the East African Rift. Usually there's a fair bit of eruption, a time of quiescence, and then more eruption. So you might see values go up and down through that sequence that we know is there. Management owns about 40%.
So you talk about going to the next step. So you're going to start drilling. You're going to establish some type of a depth. Obviously, you have a Manhattan-sized project. At what point do you say, "All right, we've drilled enough. This is what we're going to do next," and what would be that next thing?
Well, a maiden resource would be the way to go. These style of deposits, these clay-hosted ones, tend to be tabular in nature. So they tend to be, let's say, 80 meters thick or 125 meters thick or so. And then you're allowed to build a resource if it's 43101 compliant or JORC compliant with fairly wide space drilling in the case of a tabular style deposit. Whereas if you have a pegmatite that's folded, narrows, and thins, you have to be much more tight with your drilling. So we can do a methodical, wide space drill program in order to generate a maiden resource. In terms of where I would start in perhaps the area closest to Wall Street here, with the dark red. The dark red area is over 5,000 ppm lithium. So that's actually over 1% lithium oxide. And we have miles of it. So we would start maybe a 300-meter space program, and we would go from there as time went on.
Follow-up question: have you had discussions with government about bringing it online and what that timeline would look like? Because I don't know. Yeah, because I don't know if you can get bought in Tanzania. I don't know that much about Tanzania. I'm sorry.
Okay. Well, Tanzania it's a good country. It's a mining country actually. Barrick Gold Anglo Ashanti is there. They have major operations in the country. We've spoken to the Commissioner of Mines, who happens to be an old friend of ours. He used to head the Tanzanian Geologic Expedition, and we chummed around for a number of years. And he's been right behind this. He says, this is really interesting. Nobody looked for lithium in clays in the country before, but it all makes sense. One of the top lithium companies in Canada has reached out to us and talked to us. I spent a number of hours with their geos going through this. They got really excited about this project. So it's just a matter of being methodical, really, and doing the right thing, working with the government of Tanzania as closely as we can. As I mentioned, the US has reached out to Tanzania regarding battery metals. Tesla did a deal not too long ago with a company in southern Tanzania for anode materials. There's a fair bit of graphite there. Liontown Resources is also there, the company that Albemarle tried to take over and probably will succeed in taking over at some point in time. But most of the people that did go to Tanzania for lithium looked for pegmatites. They didn't look for this style of deposit. Sort of the front runners here. And it's also nice that companies like Lithium Americas has been ahead of us by, say, 3 years. I mean, if you go back 3 years to their stock price, they were way down, $2. American Lithium was 10 cents 3 years ago. But they've been sort of the first mover advantage, and as well, they've helped push the frontier of the extraction techniques, which is good for us, that it's a known entity, the extraction techniques.
We have a question from our online audience, and they're asking just your opinion and thoughts on the race for lithium and the level of M&A we're going to see as a result.
Yeah, so I have a question about the race for lithium. I think we are going to see a lot of M&A. I don't know if Livent is here, somebody from Livent's here, but I think they might be someone to take over a few things. Car companies, Volkswagen's already announced that they're looking for a partner for their lithium. I mean, the idea that these car companies would go without some sort of vertical integration would be kind of foolish, because if you got stuck like they did with the chip makers, you'd be really out. I mean, if Ford, GM, all these companies, Volkswagen, plan to electrify quite a large percent of their fleet, they're going to need that lithium, and they're going to have those contracts in place to guarantee supply. There are not that many giant lithium deposits around the world. I mean, I talk to a lot of lithium explorers, and people are often not really aware. Like, lithium does exist everywhere, but in economic quantities, those are few. And if there's good quality projects, people will come, people will show up. I know for a fact, I used to work in China. I was working for the largest mining company in China. I was a deputy general manager. And I know if I called them up tomorrow, they would be on this thing real fast, but I don't want to do that. I'd rather keep it in the arena of the Americas due to a lot of the IRA situation here in the US. It would be better to stay this way. And if we consider the world too, like India wants to push electric vehicles. They have more cars on the road than China. So the hunt for really good quality lithium projects is really going to be on.
All right, Craig, thank you very much. Great presentation.
Thank you for joining us today. We had a full day of precious and battery metal company presentations. Today's presentations are available for replay for the next 90 days. And feel free to take this opportunity to schedule a virtual one-on-one meeting with any of today's presenters. On behalf of our sponsors and OTC Markets, thank you for tuning in today.